Hello and welcome to this weekly Outlook video at xm.com. I'm Maria Pachardis, and joining me is investment analyst Marios Hadjikyriacos. We'll be taking a look at the week ahead. So Marios, let's begin with China. Chinese consumer and producer price data for January are due on Monday, but they're unlikely to draw much interest given that the coronavirus is taking up all the attention right now. So what should we be watching out for there?
Well, I really think that this will pass unnoticed by the market. They are likely to be viewed as outdated because they refer to the month of January, and the virus outbreak really came to light during the final days of the month. From the PMIs, we already saw that there wasn't any noticeable impact on the January data, so I think the market will really look towards the PMIs for February to get a better grasp on how much all of this uncertainty weighed on the Chinese economy.
I see. Moving on to the Reserve Bank of New Zealand. Is it likely to adopt a more cautious tone on Wednesday, given the negative effects of the coronavirus on New Zealand's trading partners? And how is the Kiwi likely to be affected?
I think they'll most definitely adopt a more cautious tone. So the virus outbreak has a really significant implications for New Zealand. So Australia and China are New Zealand's biggest trading partners, and those two will take a massive hit from the coronavirus. That also means an implicit hit for New Zealand's economy. At the same time, commodity prices have taken a severe hit from all of this. The last dairy auction prices were down 6%. That's not good news because New Zealand's biggest export is dairy products. Now, at the same time, we recently saw New Zealand announce a travel ban on incoming Chinese tourists, basically. So that's going to hit the tourism industry. And, overall, I would expect the Reserve Bank of New Zealand to put a rate cut firmly on the table, say something like, we're watching the development of the coronavirus very closely. If we see noticeable effects that will be long-lasting on the economy, then policy will respond, meaning a rate cut. Now, as far as the Kiwi, I think it will move lower on the decision because markets are really complacent about the prospect of an RBNZ rate cut this year. The probability for a rate cut by December is just 50%, which I think it's low. It's not really a coin toss at this point for me. I would expect the probability to move higher after the meeting and therefore the Kiwi to move a little lower. Now, having said that, the broader outlook for the currency will really depend on how the virus theme plays out.
Okay, looking at the Eurozone now, are next week's releases likely to affect the Euro?
No, not really. The Euro doesn't really respond to hard data anymore. It does respond to the PMI surveys once per month, but very little reaction on the data. Now, as far as the currency, as far as the outlook for the currency is concerned, I think it's still negative. There isn't anything to celebrate in the euro area. Growth is very weak still. There's little prospect for that to turn around without a fiscal spending package, which it seems we are not going to get anytime soon at least. So at the same time, we have the risk that the Trump administration decides to put some more tariffs on the Eurozone. And, overall, the euro is really being used as a funding currency right now. The only occasions where we saw the euro gain over the past few months were on days when the dollar was weak, and therefore the euro sort of filled in the gap. So I'm not an optimist on the euro, and I think that we might see the currency revisit the lows that we saw last year against the dollar before very long.
Okay, turning to the UK now. On Tuesday, we'll get the first estimate of GDP growth in the last 3 months of 2019 and industrial output and trade figures for December. Could worse than expected numbers increase the odds of a Bank of England rate cut in the coming months?
Yes, but only slightly. So all of this data refers to the month of December. We already know the economy was really weak in December. The Bank of England knew that, but the Bank of England chose to focus on the strong rebound that we saw in the January PMIs. So, election uncertainty hurt the economy during the final quarter, but we saw strong signs of a rebound in the new year, and we'll monitor that situation. So I think that the market will look through this data. They will view them as outdated, and I think that investors will really focus on the hard data for January in order to get a better grasp of how big of a rebound we saw in the new year.
Okay, and finally, looking at the U.S. We'll get inflation data on Thursday and retail sales figures on Friday. In addition, Federal Reserve Chairman Powell may testify before Congress on Tuesday and Wednesday. How is all this likely to affect the dollar?
Look, it's a really good situation for the US economy right now. The US economy is in a much better spot than any other major economy, certainly Europe, Japan, China even, after the virus. So all of this has been pushing the dollar higher because the dollar enjoys a special combination of higher interest rates relative to its major counterparts and also safety being the world's reserve currency. So, the economy is good. It's much better at least than the rest of them. So I don't see anything that can break the dollar's, let's say, winning streak going forward. I'm really having difficulty seeing what will change this narrative. So I'm expecting more favorable days for the dollar moving forward.
Marius, thanks so much for joining me, and thanks for watching at XM.com.